Like, what are you telling them to help kind of educate them on their next home purchase or their first home purchase? It's like, I can take anybody that's a home buyer that wants to buy, and within 12 months, if they do the work, we can get them into a house.
And I said, okay, you're not pre-qualified. Let's talk to Mike.
Yeah.
Get you pre-qualified. And our first question is it going to hit my credit? And it appraised for $998,000.
This is Millionaire Moves with Mike Mendiola. I'm here with my good friend, Cory Witherspoon. Cory, you've been a realtor for how long now?
9 years.
9 years. Okay, so in the 9 years that you've been doing real estate, what are some of the challenges that you see?
Usually credit score and lack of down payment.
So as we get into this credit score and this no longer minimum credit score with the 620, and it's for conventional buyers, is that something that we think that can actually help the economy or help the marketplace and help people be able to purchase a home with things that you're seeing?
Yeah, I think it's more of a two-sided risk. People that maybe have a lower credit score but are money heavy, I believe that will help them. On the lower end, if the credit score is bad and the money's not there, they might be getting into a property they can't afford. In the long run, I think it's going to have to be very, very careful with it.
Because we see this with FHA now with the 580 credit score. We can go down, and if they have 10% down, they can go down to a 550. So we can get people approved with FHA that way, but we've never had the opportunity to take somebody below a 620 on a conventional mortgage. Why is that such a big deal? One of the reasons that it's such a big deal is because I have a buyer right now. He has a 600 credit score. And the rest of his file looks perfect that we can get this loan approved. The problem is in a state like Texas, which is a community property state, if I take him FHA, I have to include his wife's debt. Even though she's not going to be on the loan, I still have to include her debt. Well, when I include her debt, it takes him over the threshold of the debt to income ratio and we can't get him approved. So with this news that there's no longer no minimum credit score, I can run him now, even though he has a 600 and his debt to income ratio looks good because he doesn't have to include his wife, and now I can get him approved. So there's more risk involved with this, obviously, with the lower credit score, but for certain buyers, we can actually get them approved. And I think we're going to see a little bit of bump and be able to offer more products to more people as we go down the road. As a realtor and in this market, as we're going through fourth quarter, December of 2025 right now, there's a lot of things happening, especially when it comes to rates. Everybody talks about rates. We've got the rates are going to probably get another Fed rate cut this month. That's what it looks like. And it looks like it's going to be a 25 basis point rate cut, which is going to help, hopefully, mortgage rates go forward to come down just a little bit. In your experience and the buyers that you're talking to right now, how much is that affecting, them buying with the current rate?
That's the biggest issue by far, is where before when they started looking and the interest rates were low, they see people buying, or maybe they had bought in the 2 or 3% range, even 4%, where now it's sixes, mid sixes.
Yeah.
And these people coming in to buy in that nice big house they wanted at this X price, they can't afford it because the interest rates are so high. So now they're having to bring down what they want. Housing prices are dropping right now, but with that interest rate staying up where it's at, they're very, very picky. They don't want to pull the trigger on something.
So where it comes to, because you're talking about prices are dropping. So is it a good time to buy if they can afford?
Absolutely.
So how much are we seeing? Are we seeing like a 10% drop in prices? Is it more than that?
I think the last quarter or the last 6 months, they've dropped an average of like 18%.
18%?
18%. I can give you an example. $1 million property. My buyer, we went in on it and got it under contract for $800,000 and still got 15 grand back in seller's contributions. And it appraised for $998,000.
So they're getting the price drop and the seller concessions. Oh, that's huge. That's actually a big deal. And I know people are rate conscious. I get that. But if you can swing the payment now and rates do come down a little bit in the future, just refi that, right? And it's like you almost get a bump, almost a raise, because your house payment's going to go lower long term, but can you float it short term and pick up a really great property at a cheaper price? Because at least in my thoughts and my opinion is if these rates do drop and we see them by next summer, that we're in closer to the mid fives or even the higher fives, I think that we're going to see a bigger push, right? For people to come back into the market. They're going to look to buy. And then it's summertime on top of that. People tend to move in the summer.
Absolutely.
Right? So then you're going to get this big rush. Prices are then going to hold steady, or they're going to start to rise. Or you're going to have, in your instance, what you get, you start having a lot of competitiveness for those homes.
Absolutely. That's my fear, is if it drops too fast, which we want it to come down to help the market. But if it drops too fast, there's more people pulling their houses off the market right now because they're 70, 80, 100 plus days on the market. They're pulling them off, trying to put them back on. I think September was the largest pull off in like the last 10 years of people pulling houses off the market because they were on so long. Well, if that happens, that interest rate drops. Now we're going to have more buyers with not enough volume, enough inventory, and it'll be like the COVID area is going to push the prices back.
And I did see that. I read some articles this week where at an alarming rate, people are starting to pull their properties. And I think it's a mixture of a couple of things, right? I think it's the timing of the year. And then you have, well, rates just aren't moving and people just aren't buying in the way that they are expected to buy right now. So people are like, I'm not going to discount my home anymore, right? And then what that happens is like, yeah, you have less inventory. And then when something does happen like this, yeah, you get stuck. And then now as a home buyer, you're so worried about interest rates that now you can't afford the home because the home is priced higher.
Yep.
Right. And then you're going to kick yourself like I did myself, not buying certain properties when I was younger because I was worried about the price or the rate at that time. And then I look fast forward and I'm like, I just missed out hundreds of thousands of dollars because I was too scared to jump in, or I was, felt too uneasy about it. But we know long-term real estate is still, it's a good play, right?
Absolutely.
It's going to help pay for itself long-term. So like if you have somebody that you have a first-time home buyer, like what are you telling them to help kind of educate them on their next home purchase or their first home purchase?
First off, which most of them don't know, is get with a good lender and find out what your purchasing power is. And then go through your numbers and say, your debts, your your income and your outgoing bills and all that. And don't jump for that giant home right off the bat that you absolutely love. Start smaller and then build your way up. Stay there 3 to 5 years, get your equity out of it, move to the next one.
Right.
Don't jump in full bore on one that you can barely afford.
That's probably one of the things that people see, especially with jumping online and seeing all the houses that they see now, and they see these beautiful homes, right? And then they want to buy that beautiful home. And a lot of it could be, especially if it's from a builder, they're showing their showcase home, right? They're showing their model home. And then they go and they see it and it's like, well, yes, that price point might be $349, but this particular home is $450, $500,000. That's out of your price range. But now you've seen it, so now you gotta tame down their expectations of what they can actually buy.
Absolutely.
Right. So so in your experience, how often do you see buyers getting denied due to credit score?
Oh, right now it's not real prevalent because we don't have a lot of buyers out there.
Yeah.
Say 3 years ago, people were rushing, wanting to buy, and saw it quite a bit.
Yeah.
Quite a bit.
Well, the funny thing is my applications are still high, right? I'm still getting a lot of applications. I get typically, close to 5 a day, sometimes 10 a day. So applications, and in fact, I read earlier this week that applications over the last 30 days are the highest that they've been in the last 3 years, right?
Good news, yeah.
But it's good news. So people are applying. What I am seeing are a lot of low credit scores, right? I'm seeing a lot of low credit buyers, people that they're low 500s, they're mid 500s. What I do with those buyers is I try to give them a game plan if we can't get them approved today. But one of the things that I explain to them is like, let me look at your situation. Let me give you a game plan. Just because I can tell you no today doesn't mean that you can't buy in the future.
Right.
Like you just need to be guided. A lot of people just need to be handheld a little bit. Let me show you can buy, but we're going to have some work to get you there. If it's going to be credit repair, if it's going to be me looking at estimators and saying, all you got to do is just pay down a couple of cards, maybe a couple $1,000. And if you can do that over the next 6 months, then this is going to jump you up to maybe a 6 or 620 or 640. And now you can buy. And now you can keep working on that to work towards getting a better rate. But to actually get in and buy, we can do that. It's never, I tell people all the time, it's never a no. It's just a no right now,
exactly. Well, and the first time buyers, a lot of them they don't know. So they need a roadmap saying, like you said, not right now, but do this, this, and this. And in 6 to 8 months, you're good.
Yeah. But I get so much fear from buyers, or they're just like, I'm never going to buy. And I spoke to a gentleman just a couple of days ago, and he's like, I make this amount of money. My wife works, but she's self-employed. We can't count her money because we haven't filed taxes yet. I'm like, that's fine. Let's get it all situated. Let's look at the whole situation. And then let's get her to file her taxes, right? Let's work on the credit together. Even for you, it's like, okay, this is how much you're making. This is how much you can realistically afford. Maybe you need to look for another job that can pay you more money. Right? Because my job is to show you, like, what do you need to make for you to afford the house that you're looking to buy? This gentleman wanted to buy a $350,000 home. At the current rates with current market, he's roughly going to be around $3,000 a month at that rate, right? And so it's like, okay, well, if you're only making $42,000 a year, you're only making a little over $3,000 a month. What a lot of buyers don't understand is, like, whatever you make as your total income, and it's gross income, not what you bring home, it's gross income. So if you're making $5,000 a month, then your house payment needs to be about $1,700 a month max, right? So a lot of people is like, well, I'm paying $2,100 a month in rent. And I'm like, that's great. If you have a high credit score, you might be able to swing at $5,000 a month and have a $2,000 payment. But if you're mid-score, 640 or something like that, your payment's going to have to be around $1,700 based on that. So if you want a $3,000 property that you're paying monthly on, then you need to make, $9,000 a month, right? $8,500 a month to be able to get approved for that loan. And then we have to look at all of the debt behind that and say, okay, yeah, car payments, student loans, child support, anything of that nature. None of that can be more than 50%. So if he's only making $5,000 a month with his house, with his car payments, with everything, he can't go over $2,500, right? And that's where a lot of people get confused and they get a little disappointed. But my job is to kind of basically explain that to them, show them, because now they're better off than they did before they came to me. Because I've been doing this now a couple of decades, and just the knowledge and the information to help guide them there is like, I can take anybody that's a home buyer that wants to buy, and within 12 months, if they do the work, we can get them into a house. I think coming back to this minimum credit score is going to help that, because now there isn't just a cutoff, right? And so now with certain situations, if we can make the file look really, really good, then there's a chance for them to get approved even with a lower credit score. So I think that's gonna help things. The ones that are really going to benefit from it is people that, and there's a couple of different scoring models that are coming out, and I'm not sure if you're aware. Back a couple of months ago, they changed, and they're going to have a different scoring model that is going to help benefit people that are renting, right? So it's called Vantage Score 4.0, and they have a new one coming out called Vantage 10.0, 10T. And so those two credit scoring models are going to give a lot more credit onto their scoring if they're paying rent and they've been paying rent on time over a year or two period, right? So with those guys, especially with those younger buyers, it's going to help boost their score. So if they're sitting at a 560 with the showing of the rent history, that could help boost their score back up to 620 with the new scoring model. So we're waiting for that to roll out. I know it's been approved. We're just waiting for Fannie and Freddie to approve their side of it. And then, so that's going to help boost, I think, in 2026. That's really going to help young buyers. People with a lot of medical debt, they're going to be basically do away with that. So when you have a medical debt, and this happened to myself not too long ago, I want to say a couple of years ago, but I see it often with a lot of buyers. They'll have a medical payment, and they went to the doctor. They didn't know that they owed a balance because the doctor's office doesn't send anything, and it might be $100. And I can't tell you over the years how much I've seen this. So all of a sudden they'll get a collection on their credit report for $100 because it went past 3 or 4 months that the doctor's office submitted it. Well, that collection can take somebody from a 700 to a 620. Like that. And they never had an idea of it, right? They never knew. And so with these new scoring models, I think it's going to be huge because those are no longer going to count and they're no longer going to hit the credit, right? And so that's going to be massive. So I think, like in your situation where you're talking to these first time home buyers and you're helping educate them before they even get to me as the lender, right? Is you having this knowledge and then explaining to them, man, it's like, if you have these issues, if you had some credit issues, those things are going to help. Are you paying your rent on time? One thing as a lender, I try to ask all my realtors that I work with is like, what are the questions that you ask your buyers? And I know you guys want to stay in your lane.
First one, are you pre-qualified?
Yeah.
Have you talked to a lender?
And what if they told you no?
Second step is, do you want me to refer you 2 or 3?
Yeah.
So you can go, and I only refer people that I trust. So
right.
And the last one is, we can look at a couple but until you get that, I can't show you
Can't show
anymore
anything.
because wasting my time.
So on your side of things, do you feel comfortable ever asking somebody saying, hey, do you have an idea what your credit score is?
Oh, absolutely.
Are you currently working? I think those are, like, for me, those are big questions, right? Before I ever get a client that comes to me, because as a realtor, if somebody tells you I'm at a 500, or the really common answer is like, I don't know what my credit score is. To me as a realtor, that'd be a huge red flag, because I'm like, okay, they got low credit. That kind of can taper your expectation if it's going to be ready to buy immediately, right? And then the other thing is, are you working? Because I can't tell you how many people come to me and they don't have a job, right?
Right.
And they'll say, well, I have disability. I'm okay, great. Well, how much is your disability? It's $1,200 a month. So that's all of their income. And it's like it's literally a 2-minute conversation, right? Because there just isn't enough income. I can explain, like, you're going to need a cosigner, someone that has money that's going to help you be able to basically save value for you, that you're going to make your mortgage payment. But how much house are you really going to buy on $1,200 a month, right? You'd have to buy like a $50,000 property, and then you probably still won't get approved for that, right? So that's kind of how I feel as a lender. And I know people tell me, hey, you got to stay, everybody's just trying to stay in their lane. But I know as a realtor, I would want to ask those questions.
Well, that stuff comes up when you first talk to them.
Yeah.
Getting to know the person.
Do you get like pushback from them, or do they feel funny? Like, yeah, I don't want to give you that info.
A lot of times, like down payment, when it comes to money, down payment, but credit score, usually no.
That one's not usually a problem.
They're usually as honest as they can be on it.
Yeah.
A lot of them don't know, or haven't checked it in a while or something.
So yeah, to me, it's like, when I talk to them, that's one of the first things I'm like, what do you know about your credit? Do you know your credit score? And then I already know that I'm probably working with a sub 600 borrower. I'm like, okay, now let's check it out.
My favorite one is when you do ask them, they're like, I don't know, or I think it's about X. And I say, okay, you're not pre-qualified. Let's talk to Mike.
Yeah.
Get you pre-qualified. And our first question is it going to hit my credit? That's their biggest issue.
And I 100% get that, right? Because if you do have a lower credit score, you don't want another hard inquiry against your credit, right? Because then that's going to bring it down. Now, there is a misconception that if we do a hard pull, that they're going to drop like 30, 40 points. That doesn't happen. And so for anybody listening, anybody out there, if we do a hard pull, it's only going to drop about 3 to 5 points. Now, when we pull your credit, we're good for 90 days. We're not going to pull it again. If you plan to buy that home within 90 days, what I pulled in credit isn't going to damage you buying a home in the next 90 days. It'll damage you long term, but it's going to come right back up, right? Because it's a very short hit. But what we do, and for your buyers, we do soft pulls, right? Because all I want to do is I want to see like what their credit is, so I can give them a game plan. I can run my estimators on my side, and I can look, and then I'm like, I look at it and I can't help them, and I run my estimators and I can't help them, then I know the next step for them is to take them to credit repair. And then we try to get them with reputable credit repair companies that we know are not going to just try to steal their money. They're actually going to try to help them. So that's a big thing. We do here, like what I do, we do a lot of soft pulls. Once you get into contract, we're going to do a hard pull. And then now we're good for the next 90. We're going to close your loan. Everybody's fine. Your credit's not going to take a hit. We're good to go. I think that's one of the misconceptions that I hear. A lot of times I'm on the phone with buyers. They're definitely worried about me pulling their credit. Basically what I just gave you and just explained, that's my conversation with them, is like, listen, I just need to see it. It gives me a snapshot of your credit. It gives me your credit score. It lets me see things, and I'm able to help you. If you get any rebuttals from people like that, just say, hey, Mike will definitely take care of you because he's going to do a soft pull and it has zero effect on your credit. Let's see, one of the questions that we got, it's like, with this new minimum low credit score, are we setting up buyers to potentially fail? Are we setting up possible housing market crisis that could potentially be an issue later? What do you think about that?
Dude, that's a tight line to walk.
Right.
I think it can be very, very positive. Again, depends on the lender and how much they know about these programs.
Yeah.
Because they could get somebody off in something to get them in trouble and possibly lose the house later on because they couldn't afford it. I think it could do great things with these young buyers, first-time buyers coming in that don't have the credit or the funds right off the bat. I think it could be great, but it's double check because it could. I think it's going to be more like 80-20.
I mean, there's risk in everything, right?
Absolutely.
I mean, any home that we do, there's always a risk that somebody defaults and then they don't pay. Obviously, from our standpoint, we try to look at an entire credit profile. We're not just throwing something and hope it sticks against the wall, because we are taking into considerations like not everybody should own a home. That's the honest answer. Not everybody should own a home. And we have buyers that are on the fence like that. That makes it really tough because if they have 10 trade lines and all 10 of those trade lines are negative,
All right.
they missed payments, they went to charge-offs, they went to collections, they're going to need to show us over a period of time that they cleaned it up, and secondly, that now they're making their payments in at least a year on time. Maybe we'll feel better. But if they had 8 trade lines out of 10 that went negative on, the possibility that they still can get approved that way and it may run through, well, then that's something that the underwriter's really going to hone in on, right? And say, hey, this may not be the buyer that we want to put into the market that could cause an issue later on, and we have a bunch of foreclosures, right? Because I think that's the danger when people talk, and the conversations that I've had is like, well, when we're dropping these minimum credit scores and we're going to some of these other programs that we've heard in the news lately, I know that they're trying to jumpstart the housing market, but at the same time, they have to be very careful that we're not pushing something down the road that can be an issue later on.
Well, that's where it comes back into educating them. If they're not quite there, again, you sit down and educate them and show them how you can get them there.
You know, the one thing that's not talked about, and we talk about interest rates, is with lower credit scores, you're going to have a high rate, right? Because it just kind of goes with it, right? Because there's more risk involved in it. So, yeah, like we're talking about credit or interest rates being in the mid 6s, higher 5s. But if you have a really bad credit, or your score is 580, 570, and you're trying to get approved, you're going to be in those 7s,
right?
Just because there's much more risk associated with it. So when you have that interest rate, that payment is going to be much higher, you know, so then that all plays a part into the grand scheme of it. Yeah, this property is pretty high because that rate is really high. You can always refinance later once they've proven over a couple of year period that they have a better credit score, and as rates come down, right?
Right.
So, you know, the first thing that they should do is definitely come to me, right? And let's look at their situation. And then if I feel good and we can get an approval with them, then we're obviously going to pass them to you. And once that process is done, how long typically when you get somebody that's really, really excited, really looking to buy a home, how quickly are you moving with those clients to get them into a home?
We start looking right off the bat. Most of the buyers right now are very picky with the interest rates. They're like, I don't even want to have to paint the inside another color.
Right.
You know, it gets that. But for the young ones that are looking just to get in and start their lives, first-time buyers, a lot of times they want to move too fast, where you have to pull the reins back on them and say, look, this has foundation issues. That's where I have to take care of them.
Yeah.
Show them that. But they're ready to go. You just have to not let them get into something that's going to be a money pit.
One thing that is also that we've seen this year that we haven't seen in a long time is that new construction is looking to be a little cheaper than pre-existing houses that are out there on the market.
Yes, that will probably change after the first of the year.
Yeah. So definitely, are you getting a lot of buyers like, hey, I want to go new construction?
Actually, I've only done 3 new constructions in the last 8 months. Most of my buyers are not looking at new construction.
Okay, well, that's good.
And they're usually the younger ones. They're kind of scared of the new construction because they've heard stories, you know, oh, it was built in 2 months or whatever, which is just hearsay.
They're throwing them up, you know, kind of quickly. Absolutely. You know, but I mean, that's what builders are doing.
Absolutely.
Now, right?
There's nothing wrong with the house. They just have that impression from someone.
Yeah. Well, again, everything in context, right? Yeah. Because they don't know. You may have double the work staff building that house, right?
Absolutely.
So, doesn't mean that it's a cheap made home. One of the stats that kind of surprised me when I was talking about it a couple of weeks ago was that inventory here in the Houston area was up 23% year over year, which means we talked about your point earlier where people are starting to pull their houses off the market. But when you have a stale buyer's market and then you have high inventory that's that much higher. I mean, we're talking about almost 25% more homes on the market this year than there was last year. You know, there's tons of inventory out there, and it's like, and people are just not buying, or they're going, you know, possibly new construction, right?
Yeah.
I know one of the things I was reading earlier today is that they were talking about they need to build more homes. Builders need to build more houses for affordability.
Yes, affordable housing.
Right? So, and I look at that from a double-edged sword. I'm like, if you're going to build more, then that creates more inventory. But it's also going to start bringing down home prices. Right. Is kind of what the goal that they're trying to do, right? To bring prices of homes down. The danger in that is like the people that are sitting on equity. It's going to hurt their buying or their value, right? So then that could hurt long-term goals of them and say, hey, I'm going to sell my house once the market's better, but it may not be worth the same amount. So like I was reading that, I'm like, man, this is a lot to unpack. Right.
So, like you said, double-edged swords. They've got a lower interest rate,
Right.
but they've got high equity. But while they're waiting for that interest rate to come down, they're losing their equity.
Yeah.
So it's like a lose-lose situation
Right.
almost.
Like, yeah, because I can't tell you how many people are looking to buy their house, but they are sitting on that 3% rate. And they're like, I want to keep my 3% rate, and I'm up $400,000 in equity. Builders were to do that and keep building and building and bring down home prices even more, then they're going to lose that equity, and they didn't sell at the top, right? And it's just, there's just a lot going on, and it's
a big puzzle.
It is, right? So how do you explain all of that to a buyer that comes to you, the homeowner now, and who wants to go through that? And he's like, I want to sell. I just don't want to buy a home at 6.5% when I have a 3%. Like, how do you navigate that? How do you navigate that with that buyer? You know, with all the information that we have out there.
You just gotta have the tough conversation. Yeah. There's really no way around it. I mean, even if you've got great credit score, I think I saw today, if you were VA 30-year mortgage, you could get like 5.7, low compared to what it has been over the last several months. You just got to have that tough conversation saying, number one, we're going to have to sell your house at a reduced rate because it's coming down. It's not what Zillow told you. We'll comp it out, and you're probably not going to like it. You're still going to make money. But then when you go to move, you're probably looking at the next price point down because your interest rate is you're going to double your interest rate almost. So
yeah, and that's the big thing. Like, even for me, like, I'd love to move. I just have such a good interest rate, and I know the next house, we're going to go up a few $100,000 from what we bought originally. That's just what the price point is. But now when I eat that additional few $100,000 and with double my interest rate, it's like, it's a shock, because you're like, I have a super affordable home now,
right?
But now we're talking about astronomical kind of prices, because now it's like I could buy 2-3 houses for that, or I used to be able to.
And it'll shock you when you look at your outgoing now with that payment, and then you adjust the payment over here, and you're like, man, am I going to have enough money with all the standard bills that I already have?
Right. And I know my wife was like, no, I think we're good. And I'm like, yeah, but we've outgrown this one, or we've outlived this home. I think we need to get into something newer, get into something that we want. What's one thing that you want buyers to understand in this market, and the challenges that you've seen, and, with all the news coming out there? Because, it seems like it's a daily thing, there's something coming down the pipeline almost every day, especially for someone that's looking to buy. Like, what's the one thing that you'd want them to take away?
Education.
Yeah.
Get on, read about it. If you're like me, can't sit and read at a computer very long, call somebody that you know, or ask a friend for an agent that they might know, or a lender that they might know, that can guide them through this. Because it's a scary situation going into, especially for first-time buyers.
Yeah.
They don't know anything about it. So educate yourself. Find someone that can educate you in normal English. If you can read it online, dig into it. But you just need to be educated.
I try to do that the best that I can. I try to explain it like I'm speaking to my 7-year-old at home, right? So, and there's never a dumb question. And I think that's one of the things that, when I do speak to buyers, or I even speak to realtors, and they say, hey, did somebody reach out? They said that they were going to call you, or I called them and they didn't answer, and they haven't connected with me. I think it's that. I think that they're afraid to have those conversations. I don't want to sound like they're uneducated about the subject, but that's my job, is to help educate and help explain it so that they completely understand what they're getting into and how we can navigate it. One of the toughest things, especially for a first-time home buyer or somebody looking to make a transition to another home. My final thoughts on just the whole situation: I think with the minimum credit score dropping, I think there's going to be a small percentage of people we're going to be able to help. Like I explained earlier, it's, you have that buyer in a community property state that we are here in Texas, that it's going to help that client because he can now do it on his own without having to worry about his wife's debt. Those are the particulars of people that we're going to see that we can actually help, or even a single buyer, that may have had some credit challenges, but he's been back up on the upswing, but he's just not quite there to 620 yet. We'll see some of that. But if the credit is still low, I have to work with them and get them transitioned within a year. Your information, Cory, if somebody wanted to reach out to you, how do they contact you? You're also a veteran. You're with the Marines?
Retired Marine Corps.
So if they wanted to contact you, how would they get in touch with you?
My cell phone number is 713-371-8023, or you can go to witherspoonrealtyteam.com is our website.
Okay.
You can sign up for our app there. You can look at homes there, or you can just ask questions.
So Cory Witherspoon, witherspoonrealtyteam.com.
WitherspoonRealtyTeam.com.
Yeah, that's how you get a hold of Cory. You guys want to get in touch with me, my name's Mike Mendiola. I'm a lender. You can reach out to me at 936-648-6070 or go to MikeDoesMortgages.com. If you like what you saw in this video and some of the content we talked about, go check out some of my other videos and subscribe and like this page, and we'll see you on the next one.